Let's start with commodities now, where you have seen the copper prices continue to decline a bit. The inventories are at a 10-month high, but what's working in sense of copper or in favor of copper is the fact that the net long positions have continued to be on the higher side. There are more people betting on higher prices for copper, and that is something that leads to buying on all the lower levels there. Iron ore prices also have been trading steady near its 5.5-month high. The prices are up nearly 17% this month so far. The global inventories are down 8 weeks in a row, and that is something that has been supportive. To the edible oil space there, where we have seen some buying come in as well. If you look at the palm oil prices, the futures have surged to nearly 3-week highs onto that one, and there has been a rebound for the soybean prices as well, which hit a 1-month low in the previous week. There has been some buying into the US prices, and that is mirroring for the Indian markets as well. To the crude prices, and we have seen a bit of a decline coming in for that one. You did see crude prices gain up nearly 2.5% in the previous week, but we have seen prices hold around that 1-week lows at this point in time. Of course, the US inventories is something to watch out for, but all of these markets are looking at lower volumes on a daily basis as we head towards the year-end holidays, and also the US fiscal cliff's uncertainty is something that also is weighing on to that space. So not much of positions being built up there, and you have seen a decline coming in for the Brent crude and the NYMEX crude, both those commodities today. A bit of a gain up though is coming in for the gold prices there. Remember, gold prices had declined quite sharply. We did see 2.5% of a decline in the previous week as well. But even then, gold is going for a 12th straight year of gains coming in, and the gold prices are up nearly 6% in this year. Same is the case with silver as well. Previous week was not so good, and you did see 6% of a decline coming in the previous week. But if you talk about this year, you have seen silver prices gain up by nearly 9% in all of 2012. Let's get in then Kishore Narne, and he joins us live on the show to talk about all of these commodities. Kishore, hi, welcome to the show. What's your sense now coming in for the precious metals prices? Looking at gold and silver, how would you want to start your week today?
I think, Manisha, as you already said, that the markets are lacking the depth at this point of time. So maybe there could be some kind of volatility set in during this week as the talks of fiscal cliff proceed into the next week. So probably at this point of time there is no clarity on short term. Obviously, if you are looking at a medium term, maybe a couple of months or 3 months, I would remain bearish on both of these metals. But for the short term strategy, I think I'll be selling gold at around 30,900 kind of levels, which is currently with 31,000 as a stop loss, and look for targets for 30,750 kind of levels. But I think I would be suggesting a better strategy, which would be a spread call where one can buy silver and sell gold, where one can benefit. The underperformance of silver can recover to some extent in this week.
Kishore, what's your sense coming in for the base metal prices now? Because copper prices, after the decline 3% in the previous week, have seen some buying coming in. Also, how would you want to read into the CFTC data, which has continuously shown net long positions being built on the higher side?
Yeah, I think two commodities which have seen that net longs being built up is crude and copper. I think the markets are fairly pricing in that there could be some kind of economic revival going into the next year, and the fund managers are building their positions on that. And also they're expecting some kind of stimulus measures from China, which could be propelling these commodities to higher levels. So I am not seeing any great opportunity for short term. Probably I could remain long till 442, 444 levels on MCX. But a sustained bull rally has to be accompanied with some kind of actual delivery of some stimulus from China. Otherwise, this rally will be fizzling out soon.
Kishore, what's your sense coming in the whole of the base metal sector? Because if you look across the kind of performance that they have given, copper, aluminum just about 3.5% of upside in this year. Nickel actually has gone down by 7% in 2012. How would you want to open your books in 2013?
I think I would be concentrating more on the laggards. As you said, nickel has been one of the underperformers over the last 1.5 years. It has not performed very well. The investments on the industry side are not going very well. So I think nickel could be one of the commodities which can outperform the base metal complex next year. But at the same time, we cannot rule out lead and zinc also. But one thing is for sure, that until unless we actually see some stimulus rolling over from China in the month of January or mid-January kind of levels, the rally in metals could not sustain. And fiscal cliff is one of the biggest danger in short term. If this problem is not sorted out by January 1st, I think we could see some kind of a knee-jerk reaction which could push all these metals or risky assets into a lower territory. And then from there we can see buying coming up by mid-January or so.
Very quickly, Kishore, a word on the crude prices as well. How would you want to trade that one at 1 week low kind of levels right now?
I think crude, again, we are going towards around $83, $84 kind of a level. So at this point of time, just looking at the fiscal cliff being ahead of the markets, I would trade negative on silver, on crude. So I would be suggesting to sell with 4950 as stop loss for January contract and looking for targets close to 4820 or 4800 kind of levels.
All right, Kishore, I appreciate you taking time out for us. So that's the view coming in from Motilal Oswal, selling in the intraday market for gold, silver and crude, all of those three commodities there.